Welcome to the jungle. What is the stock market? Booyah! Welcome to the exciting world of the stock market. It's a place where fortunes are made and lost, and where the financial heartbeat of the world can be felt. It might sound scary, but it's simpler than you think. The stock market is essentially a platform where people buy and sell shares of companies. Imagine a giant flea market, but instead of old lamps and clothes, companies sell pieces of themselves. These pieces are called stocks, and owning them means you own a part of the company. This flea market is the stock market, a place where buyers and sellers meet to trade parts of companies called stocks. It's a dynamic environment where prices fluctuate based on supply and demand. Think of it like a bustling marketplace where fortunes are made and lost every single day. Exciting, right? The thrill of trading and the potential for profit make it a captivating arena. We're talking about real companies you know and love. Apple, Nike, Starbucks, the works. These are the giants of the industry, and you can own a piece of them. Ever wanted to own a tiny piece of your favorite company? The stock market makes that possible. You can invest in companies you believe in and watch your investment grow. That's what the stock market is for. It's a place where dreams of financial growth and stability can come true. It's like having a backstage pass to the world of business. You get to see how companies operate, make decisions, and grow. The stock market is your gateway to understanding the business world. Owning a piece of the pie, understanding stocks. Now let's talk about stocks, the heart and soul of the stock market. Stocks are essentially the building blocks of the financial world, representing ownership in companies of all sizes. A stock is like a tiny slice of ownership in a company. Think of it as owning a small piece of a large pie, where each slice represents a portion of the whole. When you buy a stock, you're essentially buying a small piece of that company. Pretty cool, huh? This means you have a stake in the company's future and its potential success. Let's say you buy a stock of Coca-Cola. This isn't just a piece of paper. It's a symbol of your investment in one of the world's most recognized brands. You now own a tiny fraction of the company, making you a shareholder. As a shareholder, you have certain rights, such as voting on important company decisions and receiving dividends. As a shareholder, you have the potential to earn money if the company does well. This can come in the form of dividends, which are payments made to shareholders from the company's profits, or through an increase in the stock's value. Of course, there's also the risk of losing money if the company doesn't perform well. The stock market can be volatile, and prices can fluctuate based on various factors, including market conditions and company performance. Remember, owning a stock is like being part of a team. You're in it together with other shareholders, working towards the common goal of the company's success. You win together, and unfortunately, you sometimes lose together. The stock market is a dynamic environment, and being a shareholder means experiencing both the highs and the lows. But hey, that's the name of the game. Investing in stocks can be rewarding, but it's important to stay informed and make wise decisions. Happy investing! Playing the game, buying and selling stocks. So how do you actually buy and sell these stocks? Well, you can't just walk into the New York Stock Exchange and start waving money around. You need a stockbroker, a licensed professional who acts as your go-between in the market. Think of a stockbroker like your personal shopper for stocks. You tell them what you want, which stocks to buy or sell, and they execute the trade on your behalf. These days you can easily buy and sell stocks online through brokerage accounts. It's like online shopping, but instead of shoes and clothes, you're buying and selling pieces of companies. Just remember to do your research and understand the risks before jumping in. The big leagues, NYSE, NASDAQ, and other exchanges. The stock market isn't just one big room. It's a global network of exchanges where stocks are bought and sold. Each exchange has its own unique characteristics and specialties. Think of them like different arenas where the stock market game is played. Each arena has its own rules, players, and strategies. The New York Stock Exchange, NYSE, is like the granddaddy of them all, the most famous and one of the oldest stock exchanges in the world. Established in 1792, it has a rich history and a reputation for stability and prestige. Then you've got the NASDAQ, known for its tech-heavy roster of companies like Apple, Microsoft, and Amazon. Founded in 1971, it was the world's first electronic stock market. Think of NASDAQ as the cool, tech-savvy younger sibling. It's where innovation and technology companies thrive. These exchanges are where the action happens, where millions of shares change hands every minute. The hustle and bustle of the trading floors reflect the dynamic nature of the market. It's a high-stakes game, but understanding the playing field is the first step to becoming a savvy investor. Knowing the differences between these exchanges can help you make more informed decisions and navigate the market with confidence. Section 5. The Price is Right, Decoding Stock Values. Now let's talk about stock prices, those numbers that are constantly moving up and down like a roller coaster. A stock's price is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell, the price goes down. But what influences those buy and sell decisions? A whole bunch of factors. Company performance, industry trends, economic conditions, even global events can impact a stock's price. It's like a giant puzzle with many pieces, and understanding these factors can help you make more informed investment decisions. Remember, knowledge is power in the stock market. Section 6. High risk, high reward, the two sides of stock investing. Investing in the stock market can be like riding a roller coaster. There will be ups and downs. It's important to remember that investing in stocks involves risk. The value of your investments can go down and you could lose money. But on the flip side, the stock market offers the potential for significant rewards. Over the long term, stocks have historically outperformed other investments like bonds or savings accounts. The key is to invest wisely, diversify your portfolio, and be prepared for the long haul. Remember, Rome wasn't built in a day, and neither are successful investment portfolios. Section 7. Knowledge is power. The importance of understanding the market. So why should you care about the stock market? Even if you don't plan on becoming a day trader, understanding the basics can empower you financially. The stock market is the engine of our economy. When the market is doing well, businesses grow, jobs are created, and everyone benefits. Understanding how it works gives you a better grasp of the financial world around you. It's about taking control of your financial future. By learning the ins and outs of the market, you'll be better equipped to make informed investment decisions and grow your wealth over time. Section 8. Keep on learning. We've covered a lot of ground today, but remember, this is just the tip of the iceberg. The stock market is a vast and complex world, and there's always more to learn. Don't be afraid to dive deeper, ask questions, and seek out resources that can help you expand your knowledge. The more you learn, the more confident and successful you'll be as an investor. And hey, you never know, maybe one day you'll be giving me stock tips. Now go out there and make some money.